It is what it is. All right. So let's start. Okay. I don't know if many of you are how many of you have been here before or not, but I'm going to before I present the topic, just a few things, that I just want to just kind of give words of wisdom about the markets. Two things. One, and legally, I have to tell you, there's a substantial risk of loss in futures trading, and past performance is not indicative of future results. So, trade only with risk capital, and derivative trading, futures trading involves a lot of leverage, and leverage trading is very dangerous. Okay, and risky. The second thing is this recording will be on YouTube, so you will be able to watch it there as well. We update those just for people who couldn't show up, or for you to see it second time to help you. So we started with that, which is good. Now, again, remember what I'm trying to do here, and I'm going to remind it probably in every single webinar that I'm doing. I'm trying to make you think independently. I don't want you to imitate anyone. I come across this more and more and more. You cannot trade somebody else's head. You cannot trade somebody else's risk tolerance. You cannot trade somebody else's goals, understanding, interpretation. Everything that I'm teaching you here is basically for you to think about, absorb, and apply it your own way. I see, for example, Sean has a guitar there in the background with notes. He might find a certain rhythm in the market that other people do not because of his background. There might be somebody in engineering that applies it one way, somebody in accounting that applies it one way, somebody who has a construction business that applies it in a totally different way. So everybody will interpret the markets in different way. And I'll tell you this, there's no wrong way. The only wrong way is when you have bad risk management. Talking about that, what you want to ask yourself, okay, which tools do you need to make better decisions? For example, if you read Bloomberg all day about the interest rate environment, would it help you become a better trader? Maybe it will, maybe it won't. It wouldn't help me. So I simply, I read it out of interest here and there, but not because I think it's going to add anything to my knowledge for me to make better decisions. As you learn to become a trader, be very picky as far as the information that you gather. You don't want to waste your time, and you don't want to be influenced by a lot of information. It will only make you biased. You might read a bullish article and the market might be bearish the next day, or you might read that the world is coming to an end and the next day will be the best day that the NASDAQ ever had. So again, ask yourself, how the tools that you have will make you have better decisions. If the tools that you have, it's a hard recognition, but sometimes you could say to yourself, which these tools, that I used so far do not help me make better decisions. Some people are clinging, to tools that they hope would help them. Maybe it's an indicator that they bought. Maybe it's something that they've adopted. Maybe they have adopted it from a book, and they're trying to force, the market on that product, and it just doesn't work. So always ask yourself, which tools really help you make better decisions, and minimize it. Throw it away if it doesn't. It's hard sometimes. You might have spent money on it or time, but trust me, in the long run, it will not distract you. You might think that I'll tell you this, don't think that the most sophisticated tools out there that will help you make better decisions. Sometimes simple tools make you a better decision maker. The third question that you have to ask yourself, are you using these tools right? So the tools that you do have, are you using them right? So you could have certain tools that indicate certain things, but are you reading it right? Are you interpreting it right? Are the decision that you are making, would be right? So those things are extremely crucial. So again, the 3 points. You want to be an independent thinker. Okay, think of the tools that help you make better decisions, and are you using those tools right? And by the way, this applies to life as well, right? It doesn't only apply to trading. You know, there's certain things that you have to make decisions. You know, you can't think of everything. You have to think of, you know, certain factors that are more important than others. The market is not any different. The market is not any different than any other decision making you make. It's harder, but I would say that you can bring your disciplines from other professions into the market if you're a good decision maker. And again, the third question was, are you using it right? So before I go and introduce the topic today, this is what I want to focus on. So first thing is, before I go there, I wanted to thank everybody who contributing to community.optimusfutures.com. Anybody who participates there, adds knowledge, asks questions, I'm very, very grateful that you do that. If all of you could go in there, ask more questions, basically interact with others. I want to build a community because I read those things. I read them and it helps me understand how traders think. And I want to bring tools to Optimus Futures that would help traders. So I'm working on tools. I'm going to provide them free of charge to Optimus customers. But the more you participate, the more it helps me, you know, with that. And when the time is right, you know, probably by next webinars, I'll announce what we're trying to do. So that's it for now on that. Okay. So let me, Jake, right now you could turn, just share the screen. Okay. Yeah. Thank you. All right. Okay. So today I'm going to talk about support and resistance. Okay. And the reason that I want to focus on support and resistance is because when I started trading, this is a concept that was introduced to me. I think it's extremely important to have support and resistance. Sometimes I feel like support and resistance is something that happens because of a self-fulfilling prophecy that many people look at it, but it also has its dangers. And I will obviously elaborate about that. Jake, you can push the topic of support and resistance. Whoever participate in that forum, I will give them 3 free months of Optimus Flow with the DX feed. And I know there's some guys that are owed books, and I didn't forget, and we will get to everyone. So I promise you, I'm not just saying you're going to get it, you will actually get it. So participate in the forum, participate in the question. Jake will show it after. Okay, so let's talk about support and resistance. I'm going to make some, I made some notes for myself here to remind you, to remind myself. Okay, so the first thing is support and resistance is not a precise science. Okay, the reason that it's not a precise science because everything we do is basically on hindsight, right? Support and resistance is a product of hindsight. There was support here, there was resistance here. So it's very important to keep that in mind and not to treat it as something that is forward-looking, right? It's not a prediction tool, right? It's something that has happened, and now we're looking at probability. Will it happen again, and will it not? So I'm going to teach you to the best that I can how to use this tool with its limitations. But the first thing is not to treat it as, as a predictive tool or a science. It's just some sort of a probability tool that you can use it along with your other method. I don't think this is something you can use on its own. As you see here, I drew support lines. On Optimus Flow, we have the angles, right? So if your line is tilting or one way or another, it would show you the degree. I put them all here at zeros. So that's the first thing. Okay. So the second thing that I wanted to mention is that you should look for support in a bullish market trend and look for resistance in a bear market trend. Let me give you an example. So you know how they say the trend is your friend, right? And by the way, if you don't have those notes, don't worry about it. I'm going to publish them on community.optimusfutures.com with a little bit more of an elaborate line. So even if you don't write it, don't worry, it will be there. But if you want to write it, not a problem. So again, this is the market for the crude oil. Now, support and resistance can come in the form of channels like this. It can form straight lines like this. So anyway, you find a range. In downward range, this could go like this, and this can go like that. But anytime you find a range, you can do that. Now, a lot of people, day traders, what they want to do is get support and resistance throughout the day. So they want to buy and sell, buy and sell, buy and sell. However, if the day is choppy, you can do that. However, I would tell you this, that it's better if you see an uptrending market, it's better to look for support levels to buy off and buy into a trend, as opposed to try to find, basically places to short it. Because if the market is trading up, again, you're adding a little bit more odds in the trade going in your favor. So, and it's the same thing, look for resistance in the bear market trend. So if the market was going down, like if it was going to die today on the ES or the NQ, what you want to look is for resistance point that you short into them because the trend is down. So again, what you want to do is really trade with the rhythm of the market that day. And if it's a bad day and it looks like a bad day, negative, trade it as negative. If it looks very strong and positive, it's positive. Don't try to top the markets. Don't think that the minute you're going to short it, there could be very small corrections that might not give you a chance to make money, right? So again, when we look on hindsight, everything looks easy, but when you're in the midst of a trade, it's a different story. So again, again, it's very important. Look for support in a bullish market trend and look for resistance in a bear market trend, right? So again, then I wrote that it's not a tool to use on its own. If you're an advanced trader, and I'm talking about if you have 3 to 5 years under your belt, and I don't recommend it for new traders at all, but support and resistance can also be used scaling in slowly with, while accumulating positions. So you could start, with one position, on the long side. If it breaks, then you have another support level here that you can add, and and then it continues up and so forth. And then if you bought somewhere here, it could retest it here and go up. But again, this is very advanced. But I'm just saying that it could. Those of you who have traded for a long time, support and resistance could be used as a very good tool to accumulate positions for the day. Again, don't trade against your own risk tolerance and don't just accumulate out of greed. Look at your account and see if your account can absorb fluctuations with more trading. Okay. Okay. So the other thing is that there's many ways to draw support and resistance, as I mentioned here. I chose one way. Let me just elaborate and get into a little bit more depth here, right? First thing is that I see many traders do, okay, and by the way, when I say they do, everybody does it, and I did it, and, so I'm not coming here from a place that I was perfect, but over time, I've learned that the way I was taught originally, support and resistance, was really not the right way, because you always have to say, okay, this is the tool, but this is what people tend to do. And when you know what people tend to do, then you could avoid it, because remember one thing, everybody makes the same mistakes when it comes to the market. So what happens most of the time is that when people, for example, think there will be a certain support, they buy ahead of support, or they think the support was broken immediately, they would buy into it, So I'll give you an example. So we had a sort of a, breakout here out of this level. The market went up, ran into resistance, and started building support here, right? It started building support. And I really want to emphasize this point. So now we have 4 touch points, right? So we have 1, 2, 3, 4, roughly, there. A trader might say, okay, if you're here, for example, at this point, what many people do, because they don't have the patience for this to hit, they do it ahead of time. And this is exactly what happens. They get chopped out and they go and they get stopped out. Again, it's not a predictive tool. It's not, you have to see what happens at those levels. Now, let me tell you this. Most of the time, when they say there's 1, 2, 3, 4, there's very strong support here because it touched 4 points. And people say this is a stronger support than 2 points or 3 points. It's not true. I did not find it to be true. Maybe somebody can oppose my opinion, which is fine. Maybe you have your own observation. I'm not smarter than anyone else. I'm just telling you what I think. I think this is becoming very predictive. I think many people are looking at it. I think that it's becoming a tool that everybody's seeing. And as a result of that, this is what happens. People will start buying at the support. It would start, being choppy, make them doubt, they'll get out or they'll get stopped out. And I find that support and resistance, most of the time, as opposed to precise science of working like this, I find that most of the time, this is what happens. That, you have support, and people say, well, I'll buy it before because I think it's about to hit support. And then it just goes against them, either in choppy or it breaks through it. So most of the time, the support and resistance are not exact science. And obviously, look, if you were lucky to buy here on the 4th time, okay. But if you were the 5th time trying to do it and you're thinking it's going to bounce right back, here's what happens. And that's what really happens most of the time. Even in a very defined support level or a very defined channel, you have those breakouts and you have those full breakouts. And this is what happens. The reason that I drew those rectangles around this, because it gives me a better view of the noise level outside of support and resistance. It tells me, okay, this is how much noise existed outside of support. This much. So how much to sacrifice if you have to sacrifice. This would be the volatility, and it could use as a stop loss, on your next trade, this choppiness. And again, just as a disclaimer, stop loss does not have to be executed exactly at the same point. There could be slippage, and sometimes there's hard market conditions that would prevent you from executing it. But here's the thing that I want to emphasize with this trade. Most of the time, it would do this and it would go back into the channel. So if you were looking to buy, and you were patient enough to see if this channel bounced, which really nobody can buy here. Forget it. It's not going to happen. Nobody can buy here, right? But what you can buy is a little bit higher. And it's a better thing to do because it's just better odds. Now, in this case, if you see here, if it chopped, but then you saw that the market is actually getting back into the channel, right? Right here, just right back into the channel that was here. And now it's starting to climb up. And look what it did. It just kept on climbing. So sometimes it's better to wait for the market to climb back into a channel in a positive way, after it's been chopped out. And that's what happens, a lot of the time. Here, same thing. You had resistance, and again, I probably, discourage people from taking shorts, in an uptrending market, but but in the quiet market that is range bound, because I'm using here 30 minutes. If you're using a shorter time frame, you might see shorter opportunities. But again, we had roughly, a resistance here. And if you were to try to short it here for the 3rd time, it does this, and then it comes back. So it's better for the market to wait until it comes back and not necessarily try and short here, because again, you're going to get chopped out. Like I said, here we have 4 times and it did this. Here we had 2 times and it did this. And I find this is most of the time the scenario. So, you know, the way I was taught support and resistance, well, it was many years ago, but the way that was presented to me, it was just, I always thought that it's just my ability to recognize exact support and exact resistance that actually would give me the right market direction. What I found over time is that, you know, and again, talking to other traders as well, who use it in conjunction, was what they told me is that they say, look, you know, most of the time it breaks and comes back. So it's better, you know, to ignore all this noise. And when the market starts coming back here into the range, after it broke, you know, this support, you know, that's it, come back. Because you know what? This would become resistance. You know, after it did all of this actually would become resistance. So here you have resistance. I'm sorry. Here you had resistance, then it chopped back, right? And then it broke a support level that it did here right back into the channel. And now you have a market that's going down again. What I'm saying is, if you saw, again, resistance, here, wait to see what the market does. It does this above, and then it starts coming back. Most likely it will go down, which it did here. And again, obviously it's easy to analyze charts on hindsight and, you know, saying it would have done this, it would have done that. But the most important thing for me really to emphasize to all of this, that it's not precise science. And many times it breaks and just does its own thing. It's the same thing here, right? So here you had, you know, just, you have, maybe I should draw it. Okay. Usually I do it with my mouse, but I'm not using my mouse right now because everything is plugged in. Jay, can you draw a line here, maybe with your mouse? Would you be able to do it? Yeah, thank you. Yeah, from here, just, yeah, exactly. Thank you. Perfect. Perfect. So now you had, you know, sometimes you have support, resistance within resistance. So you have the first resistance that around this levels, and then you have this resistance here, which is not exactly, but you have here, you know, broke into the range, broke down here. And some people would, you know, short it here because there was a resistance. But again, in a very strong market that came up like this, right? It is a very strong trending market right now in crude. Here it broke again and it did its thing. So again, it's not precise science, but I would say, let's say it didn't do this move, right? It didn't continue higher. And if you were to short, you know, just see what it does around here. If it climbed back into this product, into this resistance, you know, to something that became support after it broke, it could potentially be, now, if it breaks down, this will become resistance. I hope I'm making myself clear, but, you know, the point of it all is that I just want to emphasize, you know, the noise levels that occur around support and resistance. Okay. Wait for levels to break and come back to, okay. Now, I'm going to talk to you, I don't have it on the chart, but this is something I want to emphasize. Junior level versus observed levels. Okay. And I'm going to tie it up. Try to look at support and resistance on 3 time frames and see what it looks like. Yes, I have to expand this. Okay, and see what repeats. Okay. So here's the thing. I'm using here 30 minutes for 1 month. All right. Obviously, it was just easier to use this chart to emphasize, excuse me, a trend. However, those support and resistance levels in themselves don't mean much if you don't use a number of time frames. So what you can do within your own time frames, you can say, okay, this did occur within 15 minutes. Did this occur within the 10 minutes? The more time frames it repeats, the stronger the trend is, right? So if this, for example, you know, let's say this support level somewhere here, right? So let's take a look at this. And we're thinking to ourselves, okay, maybe I should trade it here. At this point, you don't know what's going to happen. Should you put a limit order? Should you buy? Should you not? Again, not a predictive tool. And we look at everything with odds and not guarantees. So if you have this tool over here, and you see that this level right here of, let's say it's 49.46 or 49.45, whatever the case is, if it happened to be also on other time frames, pay attention, right? And then it makes it stronger and stronger and stronger, in my opinion. So again, you have junior levels, okay, versus observed levels. So if this is the first time this kind of level just appeared, this is the first time, okay, but then you have another level. Now you have to ask yourself, okay, after it touched here a number of times over here, look at other time frames. Look at other time frames to see if the same thing repeated there, and another one and another one. And let me tell you this, what I've noticed sometimes on very long-term charts, assuming before even the crude went on continuous charts, if even before crude went to zero at some point, the market sometimes has a memory for levels, even 3, 4 months, 5 months, 6 months. And again, I personally think it's not because the market is that way. I think it's just a prophecy. It fulfills itself because a lot of people looking at those levels. And if it's not, maybe it's a different reason. I don't know. I can't always have an explanation for everything that happens in the marketplace because I don't know. But I will tell you, if you see this level that happened before and before and before in different time frames, on longer term time frames, it would have more meaning on longer time frames than short time frames. Because short time frames, it's not, not in my opinion, it's not just something that you should make your decision on solely. You should look at others as well. All right. Okay. Somebody wants to get into the room. Jake, you want to let them in? They're just slightly late, but it's all good. All right. The next thing. I think that's it. Okay, yeah. Try to look at support and resistance on 3 time frames and see what repeats, right? So you'll have to have one time frame that you make your decisions on, but you can use other time frames which should be intermediate and longer to spot the support and resistance. So whatever you make your decision, again, you just hope to have better odds because on a larger time frame. So for example, if you can have 30 minutes, you can have an hour. If you're trading 15 minutes, you can do 30 minutes, an hour, a day, whatever the case is, right? And it doesn't matter what you use in terms of candle charts, line charts, what do we have here on the platform? Whether range bars or Akinashi or Renko, you can, I think Renko doesn't have time frames, but anything else that has time frames, you can take a look at. Okay, that's it. I'm good for now on explaining this. I don't have much more. I don't want to start filling your head with, with things just for the sake of talking. So Jake, let's go back to the format and any questions that you have, would be good. Jake, thank you. Okay, so Jake posted the community forum. Let me take a look at it. Looks good. Thank you. If you can participate, I would really, really appreciate it. And, so basically your question is, how do you draw your support and, and resistance? Okay. Oh, Jake, sorry. I apologize. Sorry. Go ahead. Make the thing. Okay. You change the screen? Yeah. Can we do stop share? Sorry. I guess. Okay. So we're back. All right. So, okay, so question, okay, Jim Ridge, that tools allow you to see volume and price will help confirm support and resistance. Sure. You know, you can obviously look at market profile level. I think it's called point of control, where you have a distribution where most transactions were done at. You know, Ben probably knows that 10 times better than me. Camilo is asking, is Fibonacci could be support and resistance? Sure. I mean, could it be? You know, a lot of people use Fibonacci. A lot of, I think it's, there is some merit to it because it involves a certain level of math. And again, I believe that there's a lot of self-fulfilling prophecy that happens because so many people use this specific tool. But again, you know, the question that I say, Camilo, is basically the third questions that I asked before. Do you use your tools right? You know, I don't know Fibonacci to the degree that I've learned, for example, support and resistance, and learned to be patient around certain levels. I'm sure that even with Fibonacci or anything that you use as far as drawing, you know, so as far as drawing, there will be certain deviation from it, right? So let's say certain Fibonacci level, I think it's 61% or something like that, right? It could, let's say 100, and it goes to 102. And some people say, well, that's not precise, you know, and then this indicator is not good. Well, it's not supposed to be precise. There's always noise. There's, you know, there's always noise levels, okay? There's always noise levels that exist in everything. And even with market profile, you know, or volume at prices, Jim just mentioned, you know, you also have to be very conscious of, you know, can you trade it in that specific environment, you know? So that would be, you know, something to consider as well. All right. So, okay. Ben, yes, Jim, I have an example, put it in the new. Thank you, Ben. I know I owe you a phone call. I'll call you today. In the example, when support and resistance broken, but price ultimately went up, to what extent do you think that was pros stopping out amateurs? I don't know, Michael, to be honest with you. You know, there's always this, I don't think, and I could be wrong. Listen, maybe I'll change my mind, you know, maybe I'll come, you know, across different facts that will change my mind. But I think retail is obsessed with institutional guys that are stopping them out or trading against them or anything like that. I think you have a competition in the marketplace between professionals and people are really good at what they do, you know, and then you have people who are learning, right? And I think, you know, I don't think that a professional trader, let's say somebody who's been trading for 20 years, he doesn't know where you put your stop. He just trades his risk management. He trades with the rhythm of the market, and that's the goal. So, you know, for me, I don't look at professionals are after me. Now, there are time frames, for example, I would say, that you can't trade and compete against. Some people build high frequency systems, some programmers, let's say. And again, don't confuse between somebody who trades frequently and high frequency trading. High frequency trading is only speed. You can have one trade a day. It doesn't mean that they trade a lot, but they rely on speed to execute that trade. So sometimes you have institutions that have equipment that you don't have. And you're trying, for example, to me, like some people say, I just want one tick out of the market. Then you're competing against machines, people who have more equipment than you, better equipment than you, more resources than you. They can put their machine entirely at the CME server, or if they're trading in, you know, in Europe, the DEX, they can put it in Frankfurt in the exchange, right near there, with equipment that is so close. And cost, you know, they don't pay retail commissions because obviously they have exchange memberships, you know, they do large volumes, so they negotiate with the exchange. So you don't have those advantages. So what I always tell people, don't go and fight, you can't fight a tank with a slingshot, right? So, you just can't do it. So don't go into their territory, but they're dealing in the territory of sub-milliseconds. So sometimes programmers come to me and they say, I have a program that trades 1,000 times a day. Okay, fine. Do you have Exchange membership? Can you host your equipment at the CME? They say no. Then, for sure, they're going up against the machines. Day to day, I don't think traders and professionals go out there and stop people out. I think they just trade. They trade when they want to trade. They trade when the machine tells them to trade. Do they have sometimes better tools than we do? Sure they do. Sometimes they have statisticians, people with statistic knowledge. Some people can build it in algorithms that are driven by data. Now you're getting into the business of artificial intelligence. But I don't think if you're not competing with them on time frames, I would not get into the paranoid state of mind that professionals are always stopping me. Your competition is with you. Your biggest struggle of every single trader is with himself. You're trading your own psychology. You're trading you. Many times it's so hard to trade the market because 99% of the time I find that people trade themselves, right? What they want to get out of the market. They say, for example, they want to get 10 points out of the next move or 8 points out of the next move. But it's not there. You have to trade with what you have. So anyway, a little bit of a lengthy answer, but I hope it's, gives you a little bit of, just kind of my view. All right. Okay, so somebody's asking here, okay. So instead of using fibs, couldn't better using order flow indicators, delta, divergence. Listen, like I said, of course you can. Of course you can. If you can find support levels rather than drawing them and using, market profile, volume profile, sure, go for it. I'm not opposing to it. I'm a very flexible guy, and I know everybody trades it, the way they find it. What's it called? The way they find it comfortable. So it is what it is. All right. Let me see. Message here. Okay. Let's see if anybody else. Okay. Yeah. Okay. So preferences. Yes, I should use. Okay. And my trading web is to work with volumeless level. Okay. Listen, if volume level works, then geometry, that's fine. Absolutely. Okay, Caesar, you're welcome. Let's join the Kindle POC weekly. Okay, fantastic. Okay, so everybody here basically, the way they say they choose a different tool to use the support and resistance. I'd love to see it. I'd love to see it on the forum, on the community. Show us charts. How do you use it? If you're opposed to somebody's view or you think they can improve their trading, help them. The good thing is here that, majority of the customers here are traders. So they're coming with, very good experience, to show others. And you know what? I'll tell you this. I learn from everyone. Sometimes I learn from beginners. Sometimes I learn from veterans. Because sometimes even a beginner could tell me one sentence that would click and it would say, it makes sense. It doesn't mean that I will change everything that I know and how I go about things, but sometimes it adds light and perspective. So I love the interaction between people is always good. All right. Any other questions from anyone? Ben, I don't think I can hear you, buddy. But I love the headset. Brand new website, brand new headset that doesn't work. I can't hear you, buddy. I'm sorry. All right. All good. It's all good. No, I still can't hear. Hold on. No, that's fine. That's fine. We'll I just, okay, you'll type it. Go ahead. Okay, Ben is typing a question. What do you think about trading? And okay. So Ben is asking, what do you think about trading in scalp in a range? If it's a range that again, all boils down to noise levels. If you're comfortable with that range and scalping, you absolutely can. You can. Just don't go for, just don't build methods around one ticks. You know, like when people say I trade one ticks, if maybe there's a lot of people who are successful doing it. I don't know. I'm not a fan of single ticks. Okay, if that's what you mean by scalp. If you mean between a scalp of, let's say, 5 ticks, 6 ticks, 7 ticks, 8 ticks, fine, because then you could define a risk that's associated with it. What's the risk to one tick? You know, it's just like you're looking to get one tick when the market can go against you, you know, in milliseconds, 4 and 5 ticks. The risk reward is really gets twisted with this one tick thing. So again, when you're asking, you know, what do you think about trading in a scalp? Sure. Again, try to go for bigger, you know, not for scalps that are reasonable in size. Okay, is there a way to do macros on a dome when you enter trade? Ben, I don't know, to be honest with you. Oh, Camilo asked the question, okay, about the scalp. Ben asking about the dome question. Ben, I don't know, to be honest with you. I'd ask this question. That's a really good question. If you can ask it on the Optimus Flow forum, you know, we'll talk to the developers. Let me see. Okay. Any other questions, gentlemen or ladies? Okay, I'm just going through. All right, I guess no other questions. Okay, so Ethan is asking. Ethan, you know, anything that's related to cost, you're more than welcome to call us. You know, we have everything on the site. We'll send you all the links and everything else. I just want to keep those, the topic here, educational as much as possible. So, you know, would love to. I don't want to turn it into. I don't want to turn my education into sales solicitations. If you want, approach us and we'll go from there. But I do appreciate the business. You know, we are doing it and exposing ourselves to get traders and help traders in return. Okay. All right, guys. So we're almost here, approaching 50 minutes. I guess if you have any questions, I'm going to give you another minute just to give it to you. By the way, is there any topics that you think I should cover that might be of interest to you, that you're struggling with, by the way, you know, something that you think would help you? And we can turn it into even a bigger discussion than on the forum. Maybe start, yeah, you definitely could start a thread on topics. You know, I try to pull topics really from the community that I'm building and talking to individual people and trying to make them understand. So, for example, you know, like I'll give you an example. So today I did the thing about support and resistance, right? Okay. But besides teaching people support and resistance, what I wanted to show people is that tools that you could use for trading are not precise, right? So there's a certain noise level associated with it. So the goal is, like I said, to give you tools to say, you know what I use for support and resistance, or where I buy, what's the noise level around that? What am I looking at, right, in terms of that? And then you don't start treating the sciences, you know, like the science of trading like an amateur. Tell me exactly where to buy and tell me exactly where to sell. And, you know, beginners always think that, you know, when they put a trade, it always goes against them because they're beginners. It goes against everyone. Let me tell you this. Every single trade you will place, you know, there will be trades with time because it's just a sample and statistics that you will hit the nail on the head. But many times it will fluctuate around that price, especially, you know, especially around quiet markets. It would be choppy. and then from there it might take a direction. So it's testing you, right? It's just testing you. The market always testing you. That's why I say the market is always trading you. You're trading yourself. It's like you've been in the trade now and it's boring and it's back and forth, but it's not going against you. It's not going in your favor. Maybe there's better opportunities in other markets, but essentially what happens. It is what it is. Okay, Dennis. Dennis says, the only way I have found to open a trade in a market like today is to trade into a momentum, going to the same direction, of course, using a 4-tick stop OCO orders. Hey, listen, if you're trading in the direction of the market and with the momentum of the market, that's exactly it. Today was a very wide market. If you used, 4 ticks and it helped you, that's fine. To me, today the market was very, very volatile. But if you have a different, your method, you're able to use the 4 ticks, that is fine. I find sometimes it's very hard in those environments. But again, I'm not questioning, your method, and you shouldn't question it too if it works for you. Just sometimes some markets you can put 4 ticks, and some markets that will be wide, you might need to be a little bit more flexible on that, or wait for those markets that you can use what your risk tolerance allows. So absolutely good. Thank you, Dennis. Good comment. I don't see how anyone could enter with a 1 or 2 tick stopped out every time. Well, the bid ask itself is a tick, right? So to scalp for a tick, or to aim for a tick and to make those many transactions, that's just impossible. But, Cheryl asking, can we start a thread on how to use divergence properly? 100%. Cheryl, go for it. So thank God I said ladies, gentlemen, and ladies, because we do have a lady here. Yes, definitely, go for that. A lot of the times talking about ticks, when people do demo trading, that, as you know, I'm just completely, against, besides the fact that it's going to teach you how to use the platform. I don't think it develops any good skills. One of the things when they paper trade, they go for very low ticks, 1 tick, 2 ticks. But in the demo account, you always get filled. In a real account, you might not get filled all the time, and you might not be able to exit all the time, right? So that's what it is. There's a big difference between, and people think that they can take the model from paper trading to real trading, when real trading, really, this is where you should start your model very low, small number of contracts, micros, and evolve from there. Okay, Camilo was asking, why is better, I would assume, to trade futures? I'm not saying it's better to trade futures than any other instrument in the world. If you don't have the risk tolerance to trade leverage products and you want to be a long-term investor in stocks, there's nothing wrong with it. Absolutely not. I'm not here to promote the futures industry or any other market in general. I'm just here to help those who do trade futures. I'm not here. I never in my life have I ever said that futures is better than any other tool out there. Some people would, who are in the stock business, I will tell you that sometimes it's hard for them to short because they need $25,000. So there's a FINRA rule that you need, that, and sometimes they don't have it, right? So somebody mentioned here, Ethan, you have the PDT exemption. Thank you. Which is pattern day trading. And you can go long and go short. That's one thing. The second thing is when you short in stocks, you have to pay interest rate because you're actually borrowing shares, selling them in the marketplace. And the longer time that you are in the short, then basically you have to pay interest on it. So there are advantages, from leverage standpoint, and there are advantages from the pattern day trading rules. And also, Ethan said there's a text structure which is better for futures, which is 60% is long-term and 40% is short-term. So as opposed to 100% short-term in stocks that is there. So they do have advantages, but despite all those advantages that it has, again, I'm not against stocks. I'm not against stock options. I'm not against mutual funds, exchange traded funds. Some people, honestly, they don't have the risk tolerance for the market. They should just put the money, in something that they love and do that, or do both. Listen, there's nothing wrong with doing multiple assets. You have some things that are considered maybe investments, and some people are considered trading. Futures is not an investment. You have to invest in yourself to become, in futures. I mean, you have to invest in yourself to become a better futures trader. And it's a lot more action, and it's a lot more activity, and you have to watch yourself and develop a method around it, to do that. But anyway, I hope that explains it. Okay. John is asking, no time decay in futures. There's no time decay per se, like options, which is a formula that involves time, but you really have to be careful when you approach the delivery months on the physical commodities or the expiration months on the financials, as the volume starts to shrink and go down and you don't have as much liquidity. Some people, it drives me nuts. Some people just trade all the way to the last day, like to the last few days. And I don't know why. I really have no, especially long-term traders, they don't want to, go, and switch because they're saying it's cost money. But that's ridiculous, because if you're stuck in an illiquid market, you can get out, right? So Ethan is asking, how many days before expiration do you recommend to roll switch contracts? As soon as the volume becomes, higher on the next month. And the CME publishes it. So if you go to the CME site, you look at the volume, you look at what did they do. That's it. The minute it's one contract over, you have the liquidity, go for it. So that's what I would do with every single contract. Would not keep it. As you go into expiration, even if it's cash settled, you don't know where it's going to settle. You don't know what it's going to do. So don't leave room for some, additional levels of risk that are not necessary. You're taking enough risk as a trader. Don't add additional levels. And it's important to know, it's important to know as a trader the mechanics of the market. The more you know about the mechanics, I think the better you'll have a chance against, the amateurs. Because the amateurs will trade, they don't watch when to roll over. They don't do all that, right? They trade, they might continue trading in a market that is not very liquid. Majority of, though, I would say, of the stock indices do know that. Okay. Let's see. And again, back to you, Cheryl. Please start as many topics as you want on the forum. Anywhere you need help, this is what we want to do. We want to turn it into an educational forum. Okay. Let's see. Okay, I guess no more questions, and we've been in an hour, so just gonna wait a minute to see if anybody is typing anything. Okay, I guess nobody's asking. Okay, Ethan, you're very, very welcome. I enjoy interacting with people. When I was learning, the business, there were a few good men that really dedicated a lot of time to teach me about the business and how to do things right. And believe it or not, when I was a very, very young broker in my late 20s, sometimes I can't believe how long I've been doing this. There were customers that had way more experience than me, and they taught me so much. Customers, those are customers who traded. My history as a trader, I did very little in the early days of phone execution, because right after, over 20 years ago, the CME came up with e-minis. So as I started a few years after my career, everything went electronic. So only a few years I was doing phone execution. I had a phone with a button to every pit, and I used to call the pit and place the orders for the customers. Can you imagine? You hold the customer on one side and you say, hold on, and you're on the other side. But those customers who I had, some of them traded very, very big size, and they really knew the market mechanics. And they taught me a lot at the time of how to execute, when to execute. Some of them were news traders. I'll never forget. I mean, I can never mention names, but I had a guy who was a pork belly trader, you know, because everybody's talking about stock indices, and I don't think I'm talking about pork bellies or cattle or any of those markets that are still traded. But he knew every fresh report, frozen report, who's buying, who's selling, new products that are coming in. So he knew a lot. But what I picked on is not so much that I wanted to know fresh reports or pork bellies or anything like that, but I just saw a guy who's dedicated to learning, you know, understanding the market that he's trading, which was the physical market. In the financial markets, it's more obviously more technical and trend, and you have leverage. But it was nice when those people were around and they were generous enough with their time to explain to me what they're doing, and I'm trying to do the same thing here. And you know what? Look, some of the things that I was taught initially, although they came from really, really smart people, today with some of those things, I can say, you know, I disagree with what I was taught for this, you know, for this and that reason. You might in the years to come, because of the experience that you get, have a totally different observation of what I have today, which is fine. But at least, you know, the fundamentals to evaluate things will be there just like they were for me. So in any case, on this positive note, to anybody else out there with a good soul, I want to wish a really good night. And thank you for your time. Thank you for coming and attending and being consistent. Thank you for growing the community forum. And that's basically it. So until next time, and since it's a Thursday, I'm going to wish all of you a phenomenal weekend. And that's it. All right, guys. So thank you again, and all the best. Thank you.